All right. Well, thank you all for attending. This is the webinar that we've got set up in place here with David Becker. He's one of our senior analysts who focuses on organic and non-GMO, and he's going to go over what's happening in the organic soybean and byproduct market. So this presentation, we've got a lot of questions for it in advance of the presentation. So we have 30 minutes set aside. If we run long to try to answer your questions, please forgive us. We want to make sure we get everybody addressed here. With that, Dave, would you like to share out your deck and take it from here?
I definitely will. All right. Share out my deck. Okay. I hope everyone can... Perfect. Thanks very much, George. Actually, I'm getting some background noise of something else. There we go. That's a little bit better. So welcome, everybody. Half an hour webinar, 15 minutes of listening to me, 15 minutes of answering questions or something like that. I picked the topic du jour. It's really important in the market right now. We're at a critical stage, and I think people are interested in this topic. So what's going on in the organic soybean and byproduct market? I'm going to scroll through some slides about what has happened and where we are, and then we can feel free to ask questions afterwards. So just as a summary overall, prices have rallied. I'm sure most people who are on the call understand prices have rallied from around 800 or even lower before the beginning of the year per metric ton on organic soybean meal, especially that the meal that was imported, to closer to like 1,500 per short ton. So a pretty large move. Soybeans have also rallied substantially, but not as much as soybean meal. And we'll go over why later. In conjunction with that, we basically had a perfect storm, something that would undermine this market and send prices to the point of potentially my last bullet point, demand destruction. Shipping rates have surged, but they've surged all around the world. I mean, economic growth on the back of the pandemic has made it so shipping rates are moving around, but the pandemic broke many supply chains. And so with those supply chains, getting containers, moving containers around the world have all been hampered, causing shipping rates to surge higher. Supplies that came into the United States, that are consumed in the United States, have been curtailed because our trading partner, India, has gone through what I believe is sort of the perfect storm. India's certification is under scrutiny, and they're going to have to make some changes before the beginning of the third quarter of this year. On top of that, the U.S. slugged India in the mouth with a anti-dumping and counter-surveillance petition, which could create a duty which would push prices to absolutely crazy levels from the crazy levels that they are right now. Consumers are not completely covered. So a lot of people are sitting there buying the spot market and waiting for the market to come down, hoping that there is a solution. The hopium technique, when you're trying to manage your risk, doesn't usually work out well. And then lastly, demand destruction. The question is whether or not higher prices will feed into the U.S. market, making it so the animal proteins that basically sell at supermarkets and big box stores across the United States, for the most part, some in some fast food, but mostly in supermarkets and big box stores, is eroded by higher prices for eggs and dairy and chicken and turkey. We'll see about that. All right, I'll scroll on to the next slide. So let me just make sure I can see this completely. Myself out of the way. Midwest soybean prices have increased 40% in 2021. Organic soybean meal prices in PA, which is one of our biggest consumption areas, have surged about 78% so far in 2021. So with that in mind, you can see why there's a lot of attention being paid to this particular part of the market. Most of the ingredients that are organic soybeans and organic soybean byproducts go into in the United States is on the feed side. We have very little food consumption. Some of organic soybeans, almost none of organic soybean meal. Some might go into protein powder. And there is no extreme market for organic soybean oil in the United States. It gets put into vegetable oil, but if you think about your supermarket trips, you really never see organic soybean oil on the supermarket anywhere on the shelves. Container rates, because of economic growth and supply chain disruptions, have skyrocketed. Like our main organic soybean meal partner in the United States, India, over the last 3 years, has seen the rates going from ports in India to ports, especially on the East Coast, both more in the United States, from like $90 per metric ton to $280 per metric ton. That doesn't help the underlying price. It definitely hurts it. It makes it more difficult, and it makes overall the supply chain less efficient. So to start, we had a rally in the conventional market, and while supply equaled demand and supply was growing and demand was growing for organic soybean byproducts, it was a steady demand pace. And as cargoes went up, the price went up. But after the beginning of the year, Europe cracked down on Indian soybeans and soybean meal that came into Europe because there were some contaminated containers, and the European Union really looked at APITA, who had had some agreement with, to handle the certifications. They really cracked down on them. And after cracking down on them for a while, APITA took away the certifications initially of two of the larger certification companies in India, TQ-Cert and Lycone. TQ-Cert handled the majority of the farmers. Lycone, I would think, the majority of the handlers. And so that began the process of the breaking of the supply chain. It had higher prices and higher container rates, but everything was okay until this started to occur. And this put the kibosh on the supply chain movement of beans that were crushed, being brought to the port and being shipped to the United States. It created an imbalance, and it has really not recovered from there. That was a really heavy blow, in my opinion, and it became prior to the demand by the U.S. Department of Agriculture, the National Organic Program, that all members of India who are dealing in organic product that come to the United States be certified by the NOP. They would no longer have an arrangement with APITA, a bilateral arrangement. Now, that was announced prior, but when you looked at how this APITA crackdown came about ahead of what needed to occur in July, it added insult to injury. I can't even tell you how many organizations that I know that export that are definitely NOP certified. So that's something that has to occur, and it has to occur by July for those imports to come into the United States. All right, so imports from this started dropping, but it took it really, at least from my opinion, until April before we started to see a reduction in the number or the volume of imports that came into the United States from India. India supplied almost 380,000 metric tons in the prior season, 400,000 for 2020. There was very little carryover. There probably would have been a carryover going into this year if it continued like that, although consumption is pretty strong. The amount of soybean oil that was coming in was very large. And the initial APITA issue started eroding that. But even as of March, the volume year over year for the month of March was right in line with what we had been seeing, somewhere in the mid to high 20s to low 30,000 metric tons of organic soybean oil imported per month into the United States. And as of the at least from my perspective, as of the end of March, the volume year over year from October until March, the season, the 6 months of the 2020-2021 season, year over year, it's pretty much flat in terms of how much organic soybean meal has come in. But my perception of what has come in April has been down about 66%, and May and June will probably see similar to worse levels, maybe much worse levels. All right, so the final blow, at least in my opinion, is the petition by the organic soybean processors of America and several of the organic soybean crushers, the anti-dumping countervailance case. The case is that India was able to sell organic soybean meal in the United States at levels that were below what crushers were able to make it. That's true. Why it was done, that's, how it's able to get done. The petition basically says that India provides their handlers, crushers, agricultural industry sort of a stipend to allow them to keep the oil and sell the meal in the United States below market. So they're saying that that's the case. They're saying this is why this is the case. Without putting an opinion on it, they can show that that's the case. So the question is, does the United States put a duty on it? And my guess is the United States is going to put a duty on it. And they posted the dates that they're going to put their duty on it. And so prices will, if the anti-dumping duty is put on, will rise by 258%. So there's a 158% duty. And then the regular price as it is. So, think about it, 258% on something that's like $1,300 per short ton. CNF in Baltimore, that could be very high, over $3,000 per short ton. Question is, will anybody pay that? And will there be demand destruction? Will this flow over? I'm going to give myself another 3 minutes of talking before we answer questions. I'm at 12 minutes. Will there be demand destruction? Demand destruction will occur if people at supermarkets and big box stores stop buying the animal proteins, because that's the main issue here. The market is, we had this surge in animal proteins in 2016. What we decided to do in the United States is grow the corn, because corn actually gives you a better bushel per acre total number. So the revenue per acre is better, and sort of sidestep the soybeans, which were much harder to grow, got a much lower yield per acre, and prices didn't reflect a great way to make money relative to corn. So of course you have to, in the organic space, rotate, but you want to rotate into corn faster than you rotate into beans. And so what we did was we covered it up by taking imports, and we took imports in beans, and so set up a crushing industry that could handle the beans both domestically and foreignly. And then we covered the rest up with organic soybean meal from India, and that actually covered 60% of our consumption, the organic soybean meal from India. And so, if prices continue to rise and they go up to 3,000, which would be absolutely crazy, price of the feed is going to increase pretty substantially. And will that spill over into the retail customer's price at the supermarket? And will it be distinguishable? Remember, corn and soybeans. Corn hit $7. Soybeans are like, 15 per bushel. I mean, it's the rising tide is lifting all boats. But the scenario with organic soybean meal is that we just won't have any in the short term, and we're going to be scrambling to do it. And so will the price go to the point where there's destruction? My overall view is probably not, especially when there's so much stimulus around. The government is putting stimulus everywhere, and the Fed has interest rates at zero, and they're purchasing 120 billion worth of bonds per month. So we're in stimulus zone. When we get out of stimulus zone, when the Fed puts the kibosh on the easy money, this will, if it stays like this would be a really significant issue. People will go out of business in this scenario, and then also there will be possibly a change in the way that we look at organic soybean meal and where we grow it, and if we want to take other substitutes. All right, that's it for this presentation. I'm ready for questions, George, if you're ready to give them to me. Should I stop my share, by the way?
Yeah, go ahead and stop your share, Dave. So for the attendees, for those that haven't submitted any questions, in the Q&A right down here on the bottom of Zoom, click on that and submit your questions, and we'll get them in the order that we received them. The first question that I have here, Dave, is, let me go pull it up. Will there be a duty on organic soybeans from India or a duty on organic soybean meal?
All right, so good question. It will be on organic soybean meal. There will be no likely duty on organic soybeans. And also the mix will likely change, and we will start to see more organic soybeans coming to the United States and less organic soybean meal to handle that situation.
Okay. Have U.S. consumers been paying higher prices?
Actually, U.S. consumers have not been paying higher prices yet. When I look at the price of organic chicken, eggs, and milk, they've remained in a range. And I actually wrote about that yesterday, how it's, despite what's going on, there really hasn't been any spillover at the consumer level yet.
Okay. Dave, where will the U.S. get more supply from?
Another good question. So, if we don't get organic soybean meal from India and we have to pick up where we're going to go get it from, there's the chance that more soybean meal comes from Argentina with higher prices. It will make the meal competitive. So that could come. We will probably get many more organic soybeans themselves from the Black Sea region. Last year we got something like 45,000 metric tons from Ukraine and 55,000 metric tons from Russia. I think they all came through Turkey. So I could see more of those coming in. We're not going to get more organic soybeans from the United States. We're not going to plant more. We might get a little bit more from Canada as well, too.
Okay. Dave, will the increase in organic soybean prices have any substantial effect on organic corn prices in terms of bushels?
I don't think there's going to be any change to the organics corn bushel scenario. In fact, what I think will eventually happen is that organic soybean prices will have to rise to a point where they are equal to organic corn in revenue per acre to get more people to plant organic soybeans in the U.S. If organic soybeans, which are currently close to the 30, 31, 29 region, depending on where you are in the United States and what you can get, if they go up to 35, 36, 37, then it will be an incentive for farmers to plant organic soybeans as opposed to planting organic corn. At the current levels with organic corn, a $31, $32 soybean is par. And so a higher price would drive more people there. But I don't think it's going to have any impact on what's going to happen in the organic corn market. We have plenty of organic corn, but imports could change that dynamic.
Okay. Will all Indian exporters need U.S. National Organic Program certification starting in July?
All of them will need National Organic Program certification in July. You will need that and need to show certification to be one of the people that allows you to handle it or crush it or grow it. So the answer is yes.
Okay. And just one more question here is what I see, unless anybody else has more questions they want to submit. What is the likelihood that a duty on organic soybean meal will occur?
I give that about between a 70 and 80% chance of occurring. I can't see it not occurring. I think that the petition is relatively strong enough, and there are enough people that were hurt by the low organic soybean meal import prices that the United States is going to go through with it.
Okay. Well, Dave, that's the only questions that we have from the audience. We'll take a recording of this. We'll post up on the website as well as the slide deck, and we'll share that out here later today or tomorrow so everybody has that on their inbox. Dave, thank you, and attendees, thanks for attending.
George, thanks very much. Take care.
Bye, everybody.